Hello, everyone. We're here today to talk about more on M&A again. I'm Gen Oraa. I'm a partner with Cohn Resnick, doing transactional advisory services, all financial due diligence. And with me today, my very special guest, I have Chris Lee from RTC Partners.
Hey everyone, Christopher Lee, one of the co-founders and managing partners at RTC.
Well, let's get going, Chris. My first question on your M&A journey. What initially drew you to M&A and private equity, and how did your first deals shape your perspective?
So it honestly started when I was a summer intern as a lawyer at O'Melveny and Myers in LA after my second year of law school. At that point, I wasn't sure if I wanted to do the litigation route or the transaction route. And so I ended up splitting my summer and doing about 6 weeks with each group. And I really just loved the deal aspect. I remember specifically there was a 2 day M&A negotiation workshop that the transactions department did, which was really my first exposure to the various aspects of a deal. And what I really liked about M&A is that everybody's trying to do a deal that works for them, but a deal still needs to get done. So it's really not a zero sum game. And it's how do you make sure you allocate the risk properly? How do you make sure that it's a deal that everybody feels good about doing in the end and accomplishing that? And then I stayed, working there as an M&A lawyer for a little bit, and that, took me to business school, where I got to make a lot of great connections. That's when I met Tony, the other partner here, and then we really had the opportunity to kick things off down the road. And we chose to focus on doing buy and build in the middle market because there's still just a lot of hands-on work that you can do there to really try to create companies where you're building something special, where the whole is greater than the sum of the parts. And also the more interesting aspects of the deals too, which is a people aspect, especially in professional services. No two deals are really the same. It's not just based on pure financial modeling or anything like that, because every deal is different, especially dealing with entrepreneurs that built their companies very successfully and then getting everybody to try to work together for the ultimate outcome.
Something that I'm very passionate about as well, Chris, getting into it and getting to learn more the behind the scenes. How did you form this company from scratch? Because that's a pretty amazing feat that I have seen throughout my life doing M&A. You've mentioned buy and build. It is core to your strategy. What makes it so powerful when executed well?
Well, it's because you can really take advantage of building something from the ground up. And that's what's nice. We tend to do what we do a model of integrated peers, where you like to bring similarly sized companies together and then really create a new company or a new platform. One of the issues if you're starting with a larger base and then just doing smaller add-ons there is it's very difficult to be nimble and impact the culture that's already been in place. So we really like to bring the different companies together, rebrand as a new name, as a new organization, put all the systems in place, and really go out there and create something using all the experiences of the former founders and selling owners of what they would want to do differently.
That is true because if you had a big one, it's pretty tough to deviate away from what you know, what you believe in, mission, strategy. I get that.
Yeah, it literally allows a lot of innovation at the forming the company, level, which is pretty neat, and people seem to really enjoy too, because it opens up growth opportunities, new career paths, new geographies. That's what we try to do when we say buy and build. Is we're not just completely focused on how do you save costs, how do you get those synergies. We like to say buy and build too, because we want to focus on growth. And how do you take companies that individually may have been able to grow at 5% or 7% and really target that mid-teens level growth? And part of that is being able to chase bigger contracts and bigger projects and more work using the expertise of everybody that we've brought together.
That's right. And you've done several platforms, Chris. So, what are the two or whatever number critical success factors you look for in a platform investment? Are there like specific, I don't know, should it be a certain size, revenue, a certain geography to make it worthy as a first platform investment?
Yeah, thinking of only two can be a little bit tough
Right, right.
because you definitely don't want to get anything wrong. But I would say some of those things you hit on: the service that's offered and how does it add, Geography is always a big one, but then being in the professional services space, a lot of it comes down to the people. So we always spend a lot of time making sure that the people are really in for the journey and committed for the larger vision. And I think that's what's critical to a deal going well. And not only just getting the deal closed, but also post close, getting the integration and the growth piece really comes down to getting the buy in and making sure that everyone feels comfortable with where we're going in the future.
I mean, you may have touched upon answering my next question as well, but can you share one buy and build that really worked and the key driver behind its success?
Yeah, I mean, fortunately, we've been successful with most of our investments in the AEC space. But I would just reference the most recent, which was Verdantis, which we started. I remember we were supposed to close, and then COVID hit, so that was its own challenge to deal with at first. But really getting up off the ground and growing it over about 4 years before we exited to Sterling, but while still rolling over equity and maintaining a stake. And that just whole process of really building and the management team that was in place, both when we started and when we finished, was just really instrumental to getting people on board and the buy-in there. And I would say for that company as well, a lot of the former selling owners were instrumental in bringing new companies into the fold and really just supporting the growth as Verdantis continues to shine.
Right. Since life is not happy all the time, we need to discuss the other side. So, can you briefly describe a deal or strategy that did not go as planned and what it taught you?
Yeah, I mean, I could just actually mention a couple of things here. The few times deals have gone sideways, um, it's come down to one, not making sure unequivocally that everyone is on the same page of what roles and responsibilities look like both during the deal and after. Certain acquisitions that has led to some surprises where people maybe weren't in the role that they thought they did, or they didn't really understand where they fit. And the second one is really, post acquisition. There's a lot of work that gets done when you build these companies and close them. We often have multiple LOIs out at any given time. So it's important to not let an acquisition fall through the cracks post close, and making sure the team is there in person to support, answer questions, and really make them feel like they are joining part of the organization and not just a transaction on paper.
I mean, everyone, it's exciting to begin a deal and close a deal, but there's real work involved in making your investment thesis realized post transaction. That's when the real work begins, in my opinion.
No, it is, and that's why it's such a lift, especially if you look at like the Concertus team and what we're building now. Just the amount of work that goes in from management and the rest of the team's perspective, not only sourcing the deals, diligencing them, executing them, and then integrating them extremely rapidly. I mean, since we lost Concertus less than 2 years ago, we've done like 14 acquisitions there alone,
It's
with
crazy,
several
crazy.
more in the pipeline.
Yes, it's just like a roller coaster ride on a daily basis, Chris. It's fun. Thank you. So looking ahead, as you look ahead, what excites you most about the next phase of your investment journey?
Really, our ability to just continue to grow the platforms, right? When we look at what we've done in the past, Answer, Ardura, Verdantis, under our stewardship, we've grown them bigger and bigger and bigger. And so we're really excited about what Concertus can do here, especially as looking at a global footprint and getting into expansion in new geographies such as the Middle East and Europe, and putting it all together at that level, similar to how we've been doing at Market Bridge as well, with having a really strong European presence to complement our presence in the US. So, that aspect, find it really exciting, different markets, nice little allocation of revenue streams. So that's what I've been focusing on a lot lately.
Going global yet diversified, your natural hedges, I guess, Chris, along the way in terms of running the business as well.
Yeah, and at the end of the day, you're still trying to bring all the people together. It's just been a bigger mix of cultures and backgrounds and experiences, which, when done properly, really believe that that could achieve, even better outcomes, just with the diversity of viewpoints and different experiences that people have dealt with.
Agreed. It's the best of the best. Squeeze them out and then apply them. That's for sure. Okay, Chris, final question, something that I've always wanted to ask. What trait, skills, practice you do that you believe makes you get the deal done?
You know what? I honestly think a lot of it has to do with just taking a very practical approach to the deal and making sure that we're getting all the big things right and not sweating too much of things that we know won't really matter going forward. And a lot of that is because we do deals all the time. So we have a really deep understanding of the different nuances, what everything means. But oftentimes these selling owners are selling their company or they're part of a transaction, for the first time in their career. So we also want to make sure that while we're doing our proper diligence and doing it, we're not overwhelming them with things that might seem frightening or scary, but that really don't matter going forward. And I think just taking that approach has allowed us to have like a great success rate on getting deals closed and then integrating them well afterwards.